It was a nice, smooth week this week. It was a good change for the better. The 2 weeks prior were just too much volatility. We had 2 weeks ago, we had stocks diving more than 3% on the NASDAQ, diving more than 2% on the S&P in a single day. And this week was overall very positive. We had a couple really high up days. And today, Friday, the stock market just kind of landed the plane nice and smoothly, kind of like landing at your local airport where the pilot does an awesome job. You don't even know you're already on the ground. It was so smooth. So having a day where we had stocks rise in the S&P 0.2% and then having a 2.21% increase on the NASDAQ, real smooth day. Really nice change for the better, and I'm glad we had it that way. So a couple of highlights for the week. I think overall the economic data that we saw this week, I think calmed some nerves. A week, 2 weeks ago, there was a big concern around having a recession, and things were shaping up to be recessionary. But what we saw this week was that inflation proved to be under control, and unemployment is not getting out of control. Both things boded well for the stock market. One bit of information that I heard that this week you had a high amount of companies buying their own stock. So it looks like companies in share buybacks are taking advantage of these low prices on their stocks and buying shares of their stock, which may have caused this rally in itself or been a pretty good tailwind for the rally to really exist. So that was an interesting bit of information that I heard. Overall, as we look at the market's up nicely in 2024. It was up really nice in 2023. And for a little while, we were operating below the 50-day moving average. And we've been above the 200-day moving average. We haven't been below the 200-day moving average since back in 2023 when we had the correction in the summer back then. So now we've got the S&P above the 50-day and obviously above the 200-day. So we stayed underneath the 50-day for a little while. Now we're back above it. I think the coast is clear for the stocks to remain positive. I don't know that we're going to have a really awesome rally because we still just have like a lackluster economy. So there isn't any big trend that I'm seeing that's going to drive stocks forward. AI is big. It's a big hype. It's a big topic. But until we see proven business models, I don't know how much companies are going to want to invest. I know the bigs are investing big, but aside from the big technology players, the mainstream companies, when will they invest in AI? That would be really interesting to find out. So this is my first time streaming through Stonks, and I just wanted to thank Stonks for providing a new platform to stream. I look forward to providing a lot of live streams. My particular method of investing is I'm a value investor. I've invested for a long time. I'm more of a buy and hold investor, but I do buy some options. I do short some stocks. Really, when I see something that's obviously an opportunity, I take it, whether it involves shorting a stock or buying an option on stock. But my biggest gains have always been through holding on to a stock, holding on to an investment for a long time and making a lot of money. Once I've got a winner, why let it go? Just let that winner continue to compound and build up a really nice gain and hold it for a long time. All right, so moving on. Next week, we don't have any big names in earnings coming up next week, although there is one name that I'm really keeping an eye on because I have an investment in Zim, and this is an ocean freight company, and they've been kind of left for dead. Their stock was just completely sold off. It was sold off 92% from the height to the low, and now they've really rallied back. Year to date, it's up 69%, but they're going to announce earnings on Monday, and if they exceed expectations, look out. This one can go up 25% in a day. So that one is going to announce before the market opens. So I plan to do a live stream just for Zim. It's a small cap, but there's a lot of investors, especially on Reddit, that follow this company. So I'm going to really look for an opportunity to just live stream, maybe get 10, maybe 15 investors that are in Zim or anybody else that's interested, and just talk about this really cool company. It's a small cap. We got to give small caps some love, because I think small caps could really begin to take off. They've been left behind for the last year and a half, but it's time for the small caps to really begin to gain. Because if you look at their PEs, you look at their valuations, there's a lot of value there for an investor to look at. Zim being an example, but I can give you 10, 20 examples right off the cuff. So I'm looking forward to the 19th for that earnings. The rest of the week, we've got, a couple of notable names, nothing humongous. Like 2 weeks ago, we had huge names, but this week, Lowe's is going to announce on Tuesday. That'll kind of give us a sense of what the homeowner is spending their money on. Home Depot did announce this past week or the week before, and they had an okay earnings. They did show a slowing in their business. So Lowe's may come out with a loss of sales to some extent. Some home builders going to be announcing. We have Snowflake, which is a tech company. We have TJX Companies, which is the discount retailer. They tend to always do well. I'm going to be curious to see how they do. Intuit, which is a software company. Workday software company. We'll see how they do. And the others, I'm not seeing any big names. Just a lot of, small mid-cap stocks kind of getting through the process. I'm sure we'll see some really good upside surprises, maybe some downside. Oh, here's another one. Zoom is going to announce on the 21st. And Zoom really drives a lot of free cash flow, and they have a very nice PE. They're growing the business roughly about 10% per year, which isn't bad, but the market just doesn't show them any love. They had a peak during COVID, and ever since then, the market's really made it an undesirable. Well, we'll see how they announce, and we'll see if the market reacts to potentially a positive earnings, or if they just keep selling off Zoom, which has been the case for quite a while. So it's going to be an interesting week of small and mid-cap stocks next week that I'm looking forward to. Looking at sectors, the sectors I like to look at to see, which sector has the most momentum. And we've got I'm going to go by the month, because one day doesn't tell you a complete story. For the month, utilities have done well, but I don't know that they're going to keep going, because, historically they just do okay. Over 5 years, making 20% just doesn't qualify to be an investment for me. Consumer staples did well. All that, recession fear, she's showing up. Real estate did well because of the lowering of interest rates. Healthcare showed up. Looks pretty good. Financials kind of broke even for the month. And the worst performing was technology. But although technology had a great week, they had big losses, that started pretty much about a month ago. And the losses were quite severe in some cases. Consumer discretionary had some losses. Materials had some losses. And communication services had some losses. So these guys are on the path to kind of get back these losses. And I'm sure they're going to get them back quickly, especially technology. They're, over the 5 years, they've been the top, performing sector by far. And I think they're going to catch up quite quickly. So that's where we stand with sectors. Overall, the S&P for the year is up 17%. Great, performance for the first, call it 7.5 months of the year. And I'll take it. At this run rate, we'll be at 20 to 25% gains on top of the gains we had last year of 25%. So I'll take it. That's great. I think the coast is clear for stocks to kind of begin to run. So I'm going to be interested to see which sectors do the best, and we'll see how things sort themselves out.